actually almost every month we grew over 10% every month until the end. So that was also the goal. So we're like super aggressive. We always said we're a marketing company and that uses technology. We put marketing always first, marketing and sales. We never said we're a technology company or anything. And the 10% month over month was kind of like for us the North Star.
Hi, this is Tomasz Sieboda. I'm a partner at Inovo. I back early stage founders and startups who can grow 100x or more from Poland and the region. This podcast is to help founders in Poland and Central Europe build their businesses. Today, my guest is Kai Hansen. Hi, Kai.
Hi there. How are you?
Kai is an ex-entrepreneur. He started a business called Lieferando, which he sold to Takeaway. And in his career, he also acquired a Polish business.
We merged with Takeaway.
Sorry. So Kai merged with Takeaway. And on the way, you acquired as well a Polish business called Pyszne.pl.
Yeah.
Then he became investor, which included being a partner at the Reinigo Founders, a German VC/company builder. But Kai, I also checked your LinkedIn and I saw that you are a business angel in 35 or even more, but you have there 35 startups, including 5 in Poland.
Yeah. I think it's even 40 now. I know. It's quite a big portfolio at the moment. Yeah.
That's great. I would suggest we start with your entrepreneurial experience. So you started in 2008, You started Lieferando in 2008.
Yeah.
It was in the middle of the financial crisis. Can you share a bit experience from this?
Yeah. Actually, that was super tough. I mean, we have tough times now in the pandemic, but I think back then, since all the financial system was crashing, it was pretty stressful times. And actually, my very first business I started 2006 during uni. There was a Facebook for athletes and sport clubs, and that didn't work out. So we kind of crashed the first business. Then the financial crisis hit, and we're like, what the fuck are we going to do? They were like, maybe it's the best time to fund another, to set up another venture. And actually, that was Lieferando. And actually, we started with 150,000 euros. I think on a 600,000 or 700,000 valuation, so super low. We gave up a lot of shares super early, and we scrapped it together from 5 super small investors. So it was super tough.
But did you raise a kind of pre-seed round? Meaning, did you have a product when you raised, or you raised all on presentation and paper?
Yeah, it was. We had a student who had today you would call it an MVP. It was more like a click dummy, so it was online and it somehow worked. But at the end of the day, it was real shit. And back then it was super, super hard because the ecosystem wasn't as developed as today. So there were no blogs. You didn't know about VCs. All the business angels, we had a list of a couple of business angels we knew, and who we knew that invested in internet startups. And it wasn't just as developed. It was super hard to get the money. And we started off with 2 interns, 3 founders, and we did everything ourselves. Everything.
Okay. So did you have different responsibilities? What was you responsible for?
Actually, I led pretty much from the beginning all operations and all the sales processes on the restaurant side, but also back then, actually, Lieferando was a B2B business. So we were working with banks and agencies. So I was responsible of the sales process. But, in these early days, everybody did everything. So one of my co-founder, Christoph, he worked a lot with advertising agencies. So he was kind of calling all the advertising agencies. My other partner, Jörg, he was working in banking. So he called his banking. Everybody did everything. And it became more structured after maybe a year or 1.5 years.
Sorry, was it back then a food delivery platform or?
It was a food delivery platform. It was just targeted to employees who were working overtime. And
Okay.
actually, we kept the platform open for B2C for normal customers, but we thought actually back in the days that Pizza.de, the German player, had already taken the whole market. We were like super inexperienced, and we totally underestimated the B2C market, and we thought the B2B market would be way bigger. So we didn't do our research, and that was a good thing.
Okay. And how did it look like? When did you move more into serving B2Cs? Or when did you think like we have product market fit now? Like, was there a special moment like this? Or
there was a special moment. Like after 2 years probably. Mm-hmm. I think one thing that really helped us winning was that we were the first company that introduced actually cashless payment in the market. So all the incumbent players didn't you had to pay on the door. They didn't offer any online payment possibilities, no PayPal, no credit card, nothing. And the restaurants obviously hated it because we only gave them the money at the end of the month. So we didn't pay them right away. Mm-hmm. But we could do this because we were working actually with all these agencies and banks, and they only wanted to pay once a month. So they wanted to get an invoice, pay it, and then we took the money, forwarded to the restaurants minus the commission we took. And through that, we had a big use. We didn't even know that at the beginning. We were kind of like, okay, we keep it open for B2C. We also offer cashless payment. But people loved it. And that was one thing. And the other thing was we could offer vouchers, because it's super hard to organize a voucher campaign when you have to pay at the door. So when you organize it, that it's only redeemable online, the restaurant doesn't even know that there's a voucher involved. And that helped us to grow. And that's where we're like, oh, like Pizza.de isn't that good. And they haven't, the market is way bigger than we thought. And that's where we're kind of like, oh, okay, let's scrap B2B and we go fully B2C. Even though back then, most of the investors actually believed more into the B2B story. So we kept the B2B story a little bit longer up for investors, but internally we already knew, okay, we need to go B2C.
Okay. How many fundraising rounds did you raise?
Oh, we had not that many, actually. We had the first 150, then we raised 400, then we raised $1 million. Actually, we spent half of the $1 million a month later in a Groupon campaign, which was pretty scary.
Was it profitable? Did it pay back?
It was. We were the first platform who dared to try Groupon, the first food delivery platform, and man, it was a huge success. But our platform crashed, and it wasn't online, and people still were buying all the time vouchers, even though the platform wasn't online. And the problem was we didn't have restaurants in all the cities, so we were like, "Fuck, this is going to be the biggest shitstorm," because probably many people are buying in cities where we don't have any restaurants. And we were super, super scared, but it worked out. It worked out mega well. But it was also scary to tell your investors, well, you invested $1 million months ago, and we just spent it in one day in one marketing campaign. That was super aggressive.
But you told them, right?
Oh, yeah, for sure. And it worked out. So now it's a good story. Back then, everybody was shitting themselves. But it worked out super, super well. And actually, most of the people bought coincidentally in the bigger cities where we also had inventory. And then we did another 4 million round, and then I think 11. So the last round was kind of like a blend. So we did 4, and then second closing was 11. So it was 15. So in total, we raised about 20 million.
Okay. And was it mainly for the German market or?
Yeah, actually, we made the decision to focus on Germany, Austria, and Poland. And first, we tried to enter Poland on our own. So our brand name was Smakuje. I think, do I pronounce that right?
It's very, very well. Smakuje, yeah.
But actually, we couldn't really penetrate the market well from Germany. And then actually we got in contact with the founders of Pishner, and we got super well along with them. They're super, super entrepreneurial, and we kind of merged or took over Pishner. But the two founders, I think they are still on board with Takeaway. They executed super well because they also lacked funding and probably a little bit of structure and knowledge. And they were super well connected in Poland and super operators. And we had a good Polish marketing team actually in Berlin. And that was a really good combination.
Okay. But what's interesting for me is that I assume very early, or in which year of your business did you decide to merge with another startup? Was it like second, third year?
Yeah, it was also like end of the second year, I think. I was pretty early, but on the other hand, we were like super ambitious. And when we decided to merge with Piotr, we still had the idea to actually go into more countries. Even like we also tried France, and France actually didn't work out well, and a couple of other countries. But we also quickly made then the decision to focus on just a few countries. And that was also Macquarie Capital. That's like the biggest Australian investment bank, came in as a major investor. And I think that was a good learning with them. We sat down, we were kind of like, okay, what we're going to do. And they said, hey, the markets you're in, try to be number one or number two and make a real difference and don't spread your resources too far. Because it was also that back then there was a fierce competition situation with Delivery Hero. And they had way more money than we had. I think we were probably from an efficiency perspective a bit better, like didn't burn as much money, but they just had so many resources. So we decided, okay, we just focus on these three markets, but here we do it right. And here we want to be a player that's not going to go away and that you cannot overlook. And I think that was the right decision at the end of the day. Also, I think when we merged with Takeaway, there was also a reason for Takeaway. They wanted to kind of like take over somebody that's meaningful and that actually help them to win the markets they're in. And actually they did, right? So they won Germany, they won Poland. And I think Lieferando played, and Piotr obviously played quite a big role there.
So Takeaway is now the biggest player in Germany.
Yeah, it's the biggest player in Europe, actually. I mean, they've been taken over Just Eat, and they took over the German business from Delivery Hero. And they are super strong in the Netherlands anyways. So yeah, they're the dominant player in all of these markets. Okay,
so correct me if I'm wrong, but you started around 2008. You raised capital. In the meantime, you acquired you merged with a similar company in Poland. And a couple of years later, you merged with Takeaway, right?
Yeah.
Did you see, like, first of all, how much did you grow in the meantime? Was it like 100, 200% or more? Was it like what you today would perceive VC growth? And my second question would be, why did you decide to merge? Like, and if you could elaborate a bit on the decision, how did you take it?
Yeah. Okay. Yeah, we always had huge growth. Like actually, growth was the biggest pain point because we had so many things we kind of like built on a small budget, and a lot of structures we built on a small budget. We always had to kind of like keep up with the growth. So actually almost every month we grew over 10% every month until the end. So that was also the goal. So we're like super aggressive. We always said we're a marketing company and that uses technology. We put marketing always first, marketing and sales. We never said we're a technology company or anything. And the 10% month over month was kind of like for us the North Star. We talked to so many VCs and like everybody sent us away because everybody was scared of Delivery Hero and nobody could believe that we could on long term could win against them. Then we were kind of like, we need a partner who believes in us, in the company, and who's with whom we were able to raise the resources we need, because we clearly needed way more money to win, but we never had a doubt we could win. And then also from a founder's perspective, it gives you a bit more, because we could take some risk off the table already during the merger. And for us, it was kind of like, hey, first business didn't work out. We found it during the crisis. It was like super, super tough to get where we were. We're kind of like, we also wanted to take actually some risk off the table. And it was very different times, because the investment sums were way smaller. Secondaries were like, investors really didn't like secondaries. Like nowadays, sometimes, especially the bigger VCs, want founders to do secondaries to avoid exactly that scenario, that you sell at the first offer that comes around the corner. And actually, if we had like bigger VCs offering this, maybe we wouldn't have done it. But then we also saw that Takeaway was a great company that was super profitable and just a good partner to grow with. That was actually the decision.
I would say I also see that nowadays investors often are like, you founders should sell a bit so that you feel safe and can risk a bit more.
Yeah, exactly.
I come from private equity world like years ago, and there it's very, so to say, strange. Yeah, like the investors expect you have everything you can have in this venture. We are there together. You risk more. And I think in VC, and especially in today's world, it's different. And like from what you're saying, it's a good change. Yeah, like it's good that you leave the founders, so to say, to feel safe so that they can risk a bit more.
Yeah, I think so.
Okay. Maybe my last question to your operator or founder experience is, can you discuss or present us something you perceive that you are very good at as founder? What was something like, let's call it superpower, something you think the other founders could learn from you?
From me personally, or from the Lieferando team?
I think it's easier. Let's start with from you personally.
Okay. I don't know if I call it superpower, but like, I think one thing we as a team, and I also realized like leading the operations, I think we were really good in kind of like seeing the different stages the company goes through and seeing the different structures and people we need. And I see this also in a lot of companies I'm investing at the moment, that you always go like with size and market power or market share. You go through different stages where you also, as a founder, really need to reflect on what are my tasks, what should I do, what should I delegate, and what kind of people do I need in which stage, and what kind of people can I also afford? Because you cannot afford the best people and specialists at the beginning. And it also doesn't make sense. At the beginning, you need probably more like Swiss Army knives, like people who are a bit broader and can do a little bit of everything and just like put in the hard work, and then establish more and more structures, and then grow these structures over time. And then also make the hard decision sometimes to let people go who were super helpful at the beginning. And that's super, super tough, but it's necessary to grow the business and not keep people in there who were super helpful at the beginning, but do not grow with the business. And then just bring in new knowledge that help you to grow as a business. And I think that was one of the things we did right. And we were always very cautious about. And that's also something I try to help founders with in the business I invest, to also make those decisions and also find the right timing to make that decision.
You invested in you mentioned over 40 startups. How do you choose them? Like, how do you know this is the startup I want to invest?
Yeah, it's cheesy, but obviously the founders are super important. So I really need to kind of like connect with the founders and feel that they have the energy and the vision to build something big. I mean, that's obviously one part. And the market, it has to be a big market and a scalable business model. Or at least it has to be so early that it makes sense to invest as a business angel. But usually I really look that that the business model is scalable, and also that the founders really want to scale it. Because sometimes you even have founders who, it sounds weird, but some founders don't even want to scale their business that big. Mm-hmm. And I think that's two things that's super important. I mean, and then there's a lot of other factors, right? Like macro environment, where is it based? What's the competition? Do I think that that this business model and venture is able to raise money? So I even had some actually I lost or I just won write-off, and was a super great founder. I think it was a good model. They were growing really well, but it was just not, they just didn't get any additional funding from VCs. And it was just because they were in a market that they were rolling up, they always called it like an old school business model. And it was a bit frustrating. And
did you say you had one write-off?
Yeah, I just had one write-off. Yeah.
Wow.
As a business angel, yeah. But that was very frustrating because the team was so good, the technology was so good, and they were actually good role models. But everybody turned them down. Mm-hmm. And that's also something I look a little bit like, is this venture able to raise further funding from VCs later on? It's probably not my main concern, but
you don't want to be in bootstrap businesses later.
Exactly. And you don't want to be like an agency model or something later, right?
Okay. So let's focus on the two things you mentioned, which is founders and scalability. Founders, can you deep dive, what are you searching for, or how it's the right founder, or how it's not?
I mean, I believe in every founder I invested in every business. I mean, I think one of the most significant experiences was probably Stefan from Piotr from Booksy, because I joined them for a business angel kind of late. I think it was their Series A or pre-Series A.
Yeah.
So I wasn't. Yeah. And they decided to kind of build the marketplace on top of their SaaS model and look for board member marketplace experience. And I had a call with Stefan, and I was blown away right away. I was like, this guy is going to build a huge business. It was just Stefan is so structured, and he's super analytical, and then he has great leadership skills. Everybody loves him in the company, and he has a big vision, but he can also present it in a way that it can be realistic. It's not that this guy is a dreamer, but he can he can present his vision in a way, in such a structured way that you're like, oh yeah, that makes sense. Yeah, this is going to be a big business for sure. And he's super humble as well. I love it I put the other way, I really don't like it when you have founders that have early success, but then you can also feel that they become kind of a bit arrogant, and then just we raised this and this money. And then Stefan was always super, super humble and put the business first. And I really admire him as a founder, as a CEO. But that was probably love on the first sight, and an example of a great founder. But as said, all the founders I invested in, usually super good guys.
But I can tell you from the other side, because we were already an investor in Booksy when you joined, and I remember when Stefan told us that you will be joining, and he was also so excited. He was like, he started Lieferando, he knows everything about marketplaces and this business. It was such a great chemistry, so he loved it as well. Actually, it was amazing. Yeah, but but this is interesting for me. From your experience, do you think Stefan is you have 40 founders? Is Stefan even in your portfolio a kind of amazing founder? Because,
well, you have to say he's the one I'm working the longest with probably, and he built a big business, and he also led the company in an amazing way through the pandemic now, and you can say like Stefan is pretty outstanding because I mean also what he already showed, what many other founders still have to show in my portfolio because all the like a lot of the companies are still young. Mm-hmm. He grew also as a person and as a CEO, and actually he made the step from a founder to become the CEO of a big business, and that's also something that not everybody is able to. Mm-hmm. And we will see how that turns out with other founders in the portfolio. And it's also not for everybody. Not everybody likes to lead a big business, and many people like to go back and start from scratch. But I think
if I can ask you, how do you make this step? What does it mean, like to grow from a founder to CEO of a big business?
I think you need to. That was actually something I was referring to before when you were talking to what did we do well at Lieferando. I think it's just realizing at what stage you are and what your own task is and what you need to delegate and what kind of people you need to delegate and what structures you need to do this. And you have sometimes founders, even of like super big companies, that start doing like nitty gritty stuff and just say, no, I have to decide about this button on that landing page. And then you're kind of like, man, you're a CEO, like, please. And you have like specialists for that. Let them do that, right? And focus on like merging with another company or, raising capital or like hiring good people, but leave that button alone, right?
Yeah. I recently saw a great presentation from Mathilde Collin. I don't know whether you know her. She's I think, French entrepreneur, about what's my daily activities as CEO. You can find it on SlideShare. It's amazing. For me, it was amazing. Really like shows, what the founders should at her stage should focus on, etc., etc. And when you work with founders, do you also work like you meet the more junior people, the team, or you maybe not just, or you consult the founder? How do you do it, like specifically?
Well, it really, I mean, you have to be honest, like with such a big portfolio, you're not totally close with every business. So, I mean, obviously you touch base when you invest and then in financing rounds, or if a specific topic arises, be it positive or negative. And obviously I'm closer with some founders than with others, right? Mm-hmm. But I think usually most of the topics are hiring, what are the right KPIs to focus on, and then also fundraising. And I think we talked about it before we started recording. I always sit on the founder side, and I usually say, okay, I shouldn't say this as an investor, but from entrepreneur to entrepreneur, I would do this and this and that. So that's usually how I work and how I work with founders. And I think a lot of founders respect that. And I also think at the end of the day, what's good for the entrepreneur is good for the company, and that's good for the investors, right?
Yeah.
So that's why I always put myself into the shoes of or on the side of the entrepreneurs and try to help them from their perspective.
That's very good. That's very helpful. Do you often see that in other investors like VCs or business angels? Because that should be the standard. Yeah, like we try to be the same. I hope we are. I hope our founders will say that. I don't know, but it's sometimes difficult, right? But we try to also be as thinking from the founder's perspective as possible. But what do you think on the other investors?
Well, I think it changed a lot. I think a lot of investors now think more founder friendly, and especially I've seen like surprising some of the really big ones, like US investors, really saying they work for their founders and really trying to help them. But I've also seen other examples when, especially with bigger rounds, there was bigger money involved. Probably the founders were not as important as they used to be anymore. Like that, also sometimes investors really try to maximize their share and their profit, or try to get in like super cheap and then maximize the round size afterwards. I've seen stuff like that.
You meant
quite a bit.
Like you mentioned at the beginning of two things. One was founders. What you are searching for is founders, and the other is scalability. Let's discuss the scalability, because I actually remember we analyzed one business and we sent it to you, and you had some great remarks on scalability. So how do you know a business is scalable?
That's really hard to say. And I have to say, I've been wrong a lot of times, a lot of times, right? But I look like, okay, how many people can you reach? How many people would use the specific service? Can you really build like a software solution that many people can use at the same time? And can you scale your business without scaling your personnel, right? At least not at the same rate. But it's also, you look at the market numbers and you look at the business model, and it is also a lot of times it's a bit of gut feeling, you have to say, or experience, however you want to call it. And if they already have some KPIs, it's also discussion about them. Okay, how is this going to change in the future when you kind of like need to acquire, instead of 1,000 customers, you have like 1 million customers, and how does that work? And how does it influence your marketing structure and your operational structure?
Okay. Was Lieferando scalable? And I mean, did you have drivers? Because drivers is something difficult to scale, right?
Yeah, that's a huge discussion. And actually, so we started off as a B2B company, and we decided B2B is not scalable. So when B2C, that was scalable. And I'm a firm believer that the whole infrastructure and driver part of the business is very, very hard to get profitable. I mean, like companies like Uber Eats and Deliveroo, they scaled it to a certain extent with a lot of money, but did they make money with it out of it? No, not really. And I think if you look at it, Takeaway, for example, it's part of their business, but their revenues, that's public, are really small. So they do it in certain areas for certain restaurants to serve a certain target group. But the money you make is with the restaurants that organize the delivery themselves. And I think it's super, super hard to scale this business model, to be honest.
Can you share a bit, how do you see Polish founders, how maybe different or similar they are to the German, US, Australian founders?
Well, I don't want to stereotype too much, actually, but what I experienced with all of the founders from Poland so far is that they are super, super hungry, super humble, very, very structured in the way they approach problems and how they report and deliver. And I've never, ever seen any Polish founder to be kind of like becoming arrogant or kind of like overly proud or anything. They're just always humble and hardworking. And all of them, I think, come up with a big vision, which is super impressive. And it's also like you sometimes have it, and I usually don't have it. I don't have it in my portfolio, but I've seen it that founders are like, "Oh, we raised this and this million. I pay myself a big salary, and now we can, everything can be a bit slower now." I haven't ever seen this in a Polish company. Or with a Polish founder.
Okay. And what do you think they like? Because that sounds great. Yeah. Like ambitious and humble and structured. And is there anything you think they should learn, or like maybe not to stereotype too much, but like if you think of an example, what could one of them do better? Or
yeah, I mean, all of them have big visions, and that's super impressive, right? Like, and I think they always want to take on new markets super quickly. So I had like 1 or 2 times where I was kind of like, hey, maybe you should look a little bit deeper into it, like how, because some of the founders have great success in Poland, and then we're like, oh, we just copy this in 5 other countries. And there was an example where I sometimes was like, hey, please look really deeply into the differences between the countries, and maybe try 1 or 2 countries first before you go into 5, right? And spend all the money there. because they're like super enthusiastic. And that's also something that a lot of Polish, like the Polish founders I talk with, usually really take on the feedback and take it in. And what I also like, because I do it myself, they kind of like collect feedback from different parties, and then they make up their own mind and say, okay, we follow this advice, but maybe even not this, because we formed our own opinion about it. And then that's fine, right? That's totally cool. Because you also have to say, also VCs and business angels, they don't know everything, and they don't, not every advice they give is right? Because always, you know it yourself, right? Like as an investor, you sometimes only have like also very superficial view on the business, and sometimes the founder knows a lot better. And usually the later stage, when it's about operations and the business model, the founders know it so much better than you do.
That's true. One interesting thing you mentioned on the expansion, because you said, do it right on your market, etc. But you went to Poland, in the second year of your business, you mentioned.
Yeah, yeah. That was a mistake we made. Like we also, we didn't make it without Pyszne, without acquiring Pyszne. We wouldn't have made it in Poland, because exactly it was exactly like that. We didn't do our homework really well, and then we wasted a lot of money in France, and we couldn't acquire anybody there. So we closed France actually. And it was an experience, but we lost a lot of money.
You are a great investor and co-investor to us. So I really recommend to the founders to reach out to you, to show you what they are building, what product they are building. Now they know you a bit more. And hopefully we have some more investments in Poland or the region or anywhere.
Yeah, sure. And likewise, I can just say the same about you guys. You're a young but a great VC, and I think you guys have also like you come from the business angel side, and you have a lot of entrepreneurial experience. So it's always a pleasure to work with you.
Pleasure as well. Thanks, Kai, and have a good day.
Yeah, you too. Bye-bye.